Okay, hello everyone. We are just going to start our today's session. Now, before starting today's session and moving towards the syllabus areas and starting directly to do some past paper questions, we will spend the first 5 to 10 minutes on giving you detailed introduction of what we are going to do in this particular session and how this session is going to help you in acing your exam, which is scheduled for December 2020 attempt, which is obviously hardly 15 to 18 days later is your exam. Okay, now I will give you some detailed tips and guidance, and I want you to listen this first 10-15 minutes very carefully in order to be able to understand what the objective of webinar is and how we will be able to move on to things. Okay. Okay. Now, in order to be able to get a complete idea of whether everyone is comfortable with everything here or not. Now, in order to be perfectly all right, you have to check a checklist. 3 things should be perfect. That means you're all set to go and all set to start this webinar. Okay. Thing number 1 is that you must be able to see my video, or you must be able to see me. That's the first checklist. That if you're able to see me, then it's fine. Your first checklist is okay. Okay. Second checklist, you must be able to hear me. Okay. But obviously you are able to see me, my video. And secondly, you are able to hear me. Okay. And third, you are able to see my screen on which I will do the solutions and do the workings. On the screen, I have at the moment written ACCA AFM webinar. It's a whiteboard, or you can call it a screen. So if these 3 checklists are okay, then you are all set to go. Okay, my video towards you. Secondly, my voice. And thirdly, the screen, ACCA AFM webinar. Okay. Now, before starting, these webinars are conducted by ACCA right before the exams in order to give students a cutting edge feature so that it can help them ace the exam. Now, I am thankful to ACCA for giving me the opportunity again. In the September 2020 attempt, I conducted this webinar, and in December 2020 attempt, ACCA again gave me the opportunity to conduct this webinar. So here I am with you again. Now, in this 5-day session, obviously, we have 3 hours each day for this webinar, okay? And we have 5 days. That means we have 15 hours in total, okay? Now, obviously, I think we all recognize, either it's me, either it's you, we all recognize that it is practically impossible to complete each and every past paper question, each and every topic, each and everything in these 15 hours. That's not possible, because when I teach my regular course, either I'm teaching it at campus, which is called physical class, or I'm teaching online, which is called my virtual class. The course which I teach is approximately of 150 hours. Now it takes 150 hours so that students are able to absorb each and everything. Rigorous past paper questions practice, rigorous past papers practice, rigorous concepts, repetition multiple times. Then student is able to grasp the concept and the syllabus and ace the exam in 150 hours. Okay. Now here, obviously, it's not a complete course session. It's a webinar. It's a revision session. It's a prepare to pass session. Expectation is that since your exams are just 15 to 18 days away, you all have prepared, if not all, majority areas of the syllabus. Okay. Now we are just putting a cream on the desert, right? That we will teach you all important concepts here with one past paper question each day. Obviously, we won't just directly start with the past paper question. We will first teach you all the important concepts, and then we will teach you at least one past paper question each day so that you are able to implement things easily. Okay, now this will help you a lot. Okay, secondly, I have been instructed by ACCA to make sure that I conduct these webinars. In fact, all professional papers webinars, not just it's AFM, either it's AAA, it's ATX, it's APM, SBL, whatever webinar is being conducted. I have been instructed by ACCA to teach the webinar on the basis of spreadsheet, that is computer-based software developed by ACCA. That means we won't solve the questions like writing here or assuming that the exam is paper-based. We will solve the question as if paper is computer-based. Now, in some locations, the exams are happening paper-based, okay? But in some locations, the exams are computer-based. So there would be a difference of opinion that students who are giving exam in a paper-based scenario or a paper-based format, they would be willing that this webinar is conducted in a paper-based form. And those who are giving it in a computer-based environment, so they would be willing, oh, we are lucky that we are getting practice. So the people who are giving paper-based, they don't need to worry. It's the same, all the concepts, all the examples, all the questions are the same. It's just that you are solving it on a spreadsheet or Word. So I will solve on that, and through the ACCA software, you can just copy that stuff on your papers or registers, whatever it is. One last thing. Now, since this is the, I guess, fourth time I'm conducting this webinar of AFM for ACCA, and the latest attempt was September 2020, because I think unfortunately the June attempt was cancelled. And in March also, there were many locations where the exams were cancelled. Okay, So in September 2020, I conducted, and now I'm in December 2020 again conducting. Now, one thing which we make sure is that no question from September 2020 webinar will be solved here in this webinar again. Now, carefully listen, this is just for your advantage. Because let's suppose if we go back to September 2020 webinar, the recordings of those 5 classes are available with ACCA, and you can contact ACCA and get those recordings. Now, if I teach the same questions again, 5 questions I solved in September 2020 webinar. Now, if I solve the same 5 questions again here, you won't find any value addition, and you are just left with the practicing 5 questions through my techniques. Now, what we have decided here is that with ACCA, of course, again, thanks to them, that we have decided to cover 5 different questions in this December 2020 webinar. And I strongly recommend you all that once my 5-day webinar is finished, obviously, this webinar is also being recorded. The very next day or maybe the same day, you can contact ACCA and you can get the recordings of that. Now, this is done to make sure that if anyone faces some network issue or whatever the case is, they don't miss the concept, they can get the recording of this webinar later. Now, I strongly suggest that when you finish this webinar with me, we will practice 5 questions in these 5 days, okay? You should refer to my September 2020 webinar again and watch that 5 classes so that you get 5 question practice again. In that manner, because of our strategy, you will be able to solve 10 questions. That's a big thing. 5 questions with me, 5 questions again with me, recording in different, so that you are able to grasp the concept more easily. Okay, so this is one important instruction that I strongly advise you to, when finish this webinar, please refer to September 2020 webinar recording as well. Okay, so that you get 5 more questions practice. Okay, now the first thing I'm doing is that obviously this webinar is conducted to help you all. Okay, and I want to help you to the maximum extent as possible. So obviously I don't want that we just get or remain connected in this 3 hours. Okay, we can get connected after the session as well. Until your exam, you may be able to, you want to ask or clarify many issues with you. Okay, you need to ask questions from me. So I won't just restrict myself for just 3 hours a day with you. I will keep on answering your questions. So for that, there should be a way where we get connected outside this 3-hour session. So whenever we conduct webinar, what we do as the first thing is that we create a WhatsApp group for the webinar students. Okay, now there are around 210 students attending the webinar. Okay, we will create a WhatsApp group for this so that you can remain connected with me even after the class. Now, obviously, sometimes I am busy in my classes, but if you will send question, I can reply later. Or out of this 200 students, someone will definitely help you in that group. So it is a very interactive group and it has proven to be a great success in previous webinars. Okay, so I'm sending all of you a message, a link of the WhatsApp group, and I advise you to join that WhatsApp group if you want to join now. If you want to join it later, it's your wish. Okay, you can join this so that we can remain connected and we can do a healthy discussion after the class as well, or before the class as well, or even hold it till the exam. Okay. So just a second, please. Okay, so I have sent a WhatsApp group link to all of you. No need to join now and disturb your class. Okay, you can join it later. It's sent to all of you and you can join it after the class. No need to disturb the class. Okay, now there is one more thing which we want to discuss before starting. That in these 5 days, we will cover 5 key topics of AFM. Okay. Okay. Now the first day one, which is today, we are going to cover investment appraisal, obviously considered one of the core areas of AFM syllabus. Okay. Day two, I will cover currency risk management. Okay. Day three, I will cover interest rate risk management. Okay. Day four, I will cover actuals, that is option pricing theory. And day five, we will cover mergers and acquisitions. Okay. Obviously, the questions we will solve, those questions, maybe someone would be lucky that they were facing a problem in those questions, so it would be lucky for them. But some of you might want some other questions, so obviously we can't again discuss all questions in this 3-hour session, but that's the purpose of this WhatsApp group, that you can ask other questions from me privately. Okay, now there is a big problem with this GoToWebinar session for students, that there is a question tab. Okay, now this is the first time, I think it's been 20 minutes since our class started. Okay, and this is the first time I've opened this questions tab. Now what I can see is that I have received 80 questions. Okay, I've received how many questions? 80 questions. Okay, now I would advise you not to type questions here, okay, because your question would get missed in so much messages. Okay, my teaching style is shortly we will be starting investment appraisal. Okay, after every 10 to 15 minutes of giving lecture, I will pause and then ask you that if you have any question in this previous 15-minute lecture, please ask. Then you should ask, so that I get a real-time idea of what your problem is. Like it has been 20 minutes, now I have opened this again. After 20-25 minutes of giving lecture, I will open that again. So at the moment, just look at the questions. Now the first question is from Ruban Ghani, that you are not able to access AFM handout. Now unfortunately, I'm very sorry, this is a technical issue from ACCA, and you need to contact the ACCA administration team. Adil Saeed, I've already shared the WhatsApp group link. So Afzal, Pakistan, yes, in Pakistan it's paper-based exam, but this webinar is not just taken by Pakistani students. This is from students from around the world. So that's why in majority countries the exams is being computer-based. That's why ACCA has instructed me to offer computer-based. Meena Jain, we will tell you the important topics definitely. Don't worry, but we will tell you after the session is over. Meena Jain, corporate restructuring comes under mergers and acquisitions. Okay. Now, there have been 2 messages that they cannot access the WhatsApp group link, even though some of the students have already joined the link of the WhatsApp group. My cell phone is with me, so I'm just seeing. So at the end of the topic, or maybe I'm sharing my WhatsApp number as well with all of you. So those who are unable to open the link or join through this link, they can just WhatsApp me privately after the class, not now, so that I can give you a link on WhatsApp and you can directly join. Hazik, your question, do you have spot questions? Spot comes in currency risk management. So obviously when I've told that we'll cover currency risk management, spot will be covered. Okay. Mohammed Taghi, all 5-day topics are in front of your screen. It's investment appraisal, then currency risk management, then interest rate risk management, then option pricing theory, and then mergers and acquisition. I've already told that those of you who cannot access the WhatsApp link, I have shared my number with all of you. They can just WhatsApp me after the class. I will send them the link there. Okay. Now let's start investment appraisal after all this discussion. Okay. List of questions has already been shared. Every day ACCA will tell you the list of questions. Okay. So I think we should not waste time on being able to work in advance. We can do all this after the class because I've provided you my number as well as the WhatsApp group link, and all 5-day topics will be shared by CCA with you. I think we should focus on the topic now. Okay. Thankfully, all the questions are done. Now we are starting with investment appraisal. Okay, let's start. Okay, so in investment appraisal, as we all know, that investment appraisal is all about evaluating or appraising investment opportunities. Okay, this is the main purpose of investment appraisal, that it's all about just evaluating the investment opportunities. Okay, whenever we get some investment opportunity, usually we don't invest money. Okay, we have cash, let's just invest. Okay, we have to evaluate them, and this is the primary purpose of investment appraisal, and the best technique through which projects are evaluated, as we all know, is the NPV, or net present value technique. Okay, this is the main technique through which investment projects are evaluated, that is called NPV, or net present value technique. Okay, now in investment appraisal, there are 5 major issues that you need to address. Okay, now if you are able to handle these 5 issues, that means you are comfortable with the NPV, and then we can move towards the question. Okay, now the first major issue in investment appraisal is called capital allowances or tax allowable depreciation. Okay, there are 5 major issues in investment appraisal, or NPV, starting from the first issue, which is called capital allowance or tax allowable depreciation. Okay, second major issue is currency conversion. Okay, third major issue is working capital. Okay, fourth major issue is losses carried forward. Okay, now what we are going to do is we will quickly tell you about these 4 issues independently, that what these 4 issues basically mean, so that once you are able to understand about these 4 issues, we can then proceed to the question. In investment appraisal, in order to be able to graspings, we need to handle 5 major issues. The first issue is called capital allowance or tax allowable depreciation. The second issue is called currency conversion. Third issue is called working capital. Fourth is losses carried forward. And fifth is called parity theories. Okay, now let's start about what these all issues are. Now, the first issue of investment appraisal is called tax allowable depreciation, or called capital allowance. The first issue is called tax allowable depreciation, or it is called capital allowance. This is the first issue. Okay. Now, what exactly is the capital allowance or tax allowable depreciation? Remember, the project's NPV is always computed on cash basis. The project's NPV is always computed on cash basis. Okay. Only cash related items or cash flows come in NPV calculation. In NPV calculation, no non-cash item can come. You can say this is the principle of NPV. You can say this is the rule of NPV. This is the approach of NPV, whatever you want to say. NPV is always computed on a cash basis. Right? I'm explaining you the topic of tax allowable depreciation. Remember, a project's NPV is always computed on a cash basis. No non-cash item can come in NPV calculation. Only cash inflows and cash outflows can come while computing NPV. Now, here comes the problem that depreciation, as we all know, is a non-cash item. Depreciation is a non-cash item. Okay, so basically what the rule of depreciation is that since it's a non-cash item, it cannot come in NPV. It cannot come in NPV. Okay, so you need to ignore depreciation. Depreciation you need to ignore because it's a non-cash item. Depreciation is not a cash outflow or inflow. You need to ignore that. But one problem comes with taxation, that if you don't take a depreciation, it's a tax allowable expense. If you don't take depreciation, your profits will become overstated. Your profits will become overstated and your tax will become overstated, which is a negative thing for the company because depreciation is an allowable expense. If in NPV calculations, depreciation cannot come because of non-cash, your profits will come. If you won't deduct depreciation as an expense, your profits will be overstated, your tax will be overstated. So tax allowable depreciation concept states that even though depreciation is a non-cash item, still include that in NPV calculation, deduct that, so that your profits fall and your tax falls. But you make a mistake. Depreciation shouldn't have come. Tax should have reduced, but depreciation shouldn't come. Therefore, whatever depreciation you have deducted, add that back. So that once you deducted depreciation and then you added that back, the effect of depreciation is cancelled and you're safe with NPV that you didn't take any non-cash. Repeat. Since in capital allowances or the NPV calculation, it's only on cash basis. No non-cash item can come, but obviously we have discussed previously as well that depreciation is a non-cash item. It cannot come in NPV. So you don't have to record NPV. That's the first school of thought. But the problem is if you don't record NPV, if you don't record depreciation in NPV, if depreciation is not recorded, if depreciation is not recorded, my profits will be overstated, my tax will be overstated, which is negative for me. So what I need to do is that I should deduct depreciation. even though NPV doesn't allow it, so that my profits fall, my tax falls. And since I did wrong, how to rectify that mistake? Add back depreciation again, so that the effect of depreciation gets cancelled. Now let me explain this through example. Now let's suppose my sales revenue is 1000. Okay, my costs are 800 and my depreciation expense is 100. Okay, so what should be my profit? My profit should be 1000 less 800 less 100. 100 should be my profit. And on that profit, let's suppose the tax rate is 30%. I have to pay 30% tax. That is 30. Okay. Now NPV calculation states that record only cash flows. Since revenue is in cash inflow, it comes in cash form, record it. Since costs are cash outflow, comes in cash form, record it. But depreciation is a non-cash item, don't record it. If I do like this, my profit would be overstated. It would be 200. And then I would be paying 30% tax, 60. Do you think this is negative for me? A big yes. So what does NPV calculation or tax allowable depreciation or capital allowance say? Record sales revenue, 1000. Record costs, 800. Even though depreciation is not allowed, non-cash, deduct that, 100. So your profits come to 100, pay 30% tax, 30. Fair enough. But you did wrong by deducting depreciation. So how to correct that? Now your profits and tax have been corrected. So again, add back that depreciation of 100. So that once it's deducted and once it's added back, if it gets cancelled, this is the first thing called tax allowable depreciation. I wonder, people ask me many times, why we deduct depreciation in NPV calculations? We don't deduct. We deduct and then we add back so that the effect is cancelled. We just deduct so that we don't have to pay extra tax. Okay, this is the first thing called capital allowance or tax allowable depreciation. Any questions with it, you can ask. And if you need to copy, you can do that. Then we'll move towards the second topic. We will discuss all 5 topics in pieces and then move towards the question. No, Mohammed, if you have Mohammed Uzair, if you are doing through that channel, you can use that. Yes, Anjali, you are right. Those who are talking about tax in arrears, it will be discussed, don't worry. Yeah, TAD and tax savings are the same, Alvin. Amna Jamshed, if you can elaborate your question a bit, I am not clear with your question. Meena Jain, tax losses carried forward is a thing from taxation authorities. If they are allowing, it doesn't matter it's in domestic or international. Yes, at the RITO, it will become, and we will be discussing it shortly as well. Mohammed Afzal, you need to wait for that, please. Yes, at the RITO, yes. I think I mentioned the topic about losses carried forward. Please don't ask questions regarding loss carried forward. We will be discussing it shortly. Bharati, there are 2 issues of dealing it with. One is this, and I will be discussing the balancing allowance with this as well. Yes, Nayab. Suddenly, when the question mentions this. Akinwumi, the fifth issue is the losses carried forward. Satya Sravani, you can ask question here where you wrote, where can I ask question? You can write the questions here. And you're asking that why I can't see the other student questions. No one can see questions of each other. Otherwise, every student will just spend time on seeing that what others have asked rather than focusing on the lecture. So that's why you are only able to see what you asked. Yunus, it's the same. Capital allowance is also called tax allowable depreciation. Again, about additional tax, you can refer to after this or maybe 1 or 2 days later, you can refer to my September 2020 webinar lecture on investment appraisal. It's a very detailed question on which this issue is covered. Mohit, the schedule for day-wise has already been emailed by ACCA to all of you, and if you haven't received, you can please contact them. Okay, now I have received a message that please increase the speed. I think no one here should be guiding a tutor that whether he should increase the speed or decrease the speed, because I have to handle, this is with due respect, okay? I have to handle 210 students, okay? Now, I completely understand that some of you are really fast, really intelligent, really capturing, okay? I understand that. And for those of you, you don't want to spend time on just question discussion of other students. You just want to do question and go. Okay. But obviously for that, you have to deal with me one-on-one, and I don't teach one-on-one. Okay. Now, if you have come in a group, no need to be sorry. It's with due respect. No need to be sorry. So if you have come in a group, then make sure that we handle the speed according to the group. Because if I will increase the speed, I challenge you after 5 minutes, I will get a message, please reduce the speed. So I can't work like this. Now, Mohammed Uzair, again, I would request you that I have mentioned 5 issues which I'm going to discuss. Okay. Out of that, I've discussed the currency issue as well that we have to discuss shortly. Then another student is asking about losses carried forward. Have some patience, because at the moment we are at tax allowable depreciation. Once we do that, then we will move forward. Okay. And Amna, I will take your question after 10-15 minutes, because that is going to come. Okay. Yes, Francis, once you deduct depreciation, it shouldn't be coming towards a wrong thing, because once you deduct depreciation, that's a wrong thing. So you have to always add it back. Okay. Now, Murtaza, that's a completely incorrect question. The depreciation will always be claimed in the country where you are investing. Whatever we are going to cover here, again, someone is wanting to get APV discussed, someone is wanting to get sensitivity analysis covered, someone is wanting to get payback covered. Again, we can't do everything in one class of investment appraisal. You can contact me after the class. We will absolutely make sure that your concerns are addressed. Okay. No guidance, please, that increase the speed or reduce the speed. Again, I got one more message. Please do this, please do that. No, no, don't do this, please. You are just teaching, seeing one tutor, and I'm seeing 210 people. I have to ensure everything. Okay. I'm the captain of the ship. Let me handle that. Okay. Okay, so we discussed capital allowances or tax allowable depreciation, that this is the first issue, that whenever we will do depreciation deduction, it is just to reduce tax and reduce profit. And once we do that, it's an incorrect thing. We need to add back depreciation. Okay. Second, now the second issue I'm going to cover, because in the order it was late, but there are many questions coming from that. That is losses carried forward. Now, get the concept of losses carried forward. What exactly is the concept of losses carried forward? Now, basically, we all know that, let's suppose in year 1, year 2, year 3, the company earned profit of 100, the company earned profit of 200, the company earned profit of 250. Let us say in year 1, company earned profit of 100, in year 2, company earned profit of 200, and year 3, company earned profit of 50. The taxation authorities will ask for tax. That year 1 profit, pay tax, and you will be happy to pay tax. That okay, in year 1 your profit was 100, so your tax would be 30. In year 2 your profit was 200, 30% tax would be 60. And in year 3 your profit was 250, so 30% tax would be 75. Okay, this is how workings go, that when you earn profit you pay tax. Okay, now listen carefully. Let's suppose the scenario comes like this. In year 1 you incurred a loss of 100. In year 2 you got profit of 200, and in year 3 you got profit of 250. Now by default tax rate is, let's suppose, 30%. Okay, in year 3 you earned 250 profits, you will be happy to pay 30%, $75 tax. In year 2 you earned 200 profit, you will happy to pay $60, 30% tax. Now in year 1 you incur loss of 100. So what an investor or a company or me and you want, that when we earn profit of 100 we have to pay 30% tax. So if we incur a loss of 100, the government or taxation authority should give a refund of 30. Now this never happens. This never happens. This is your wish only, that when I earned profit of 100 in the first case, I had to pay tax of 30. Okay, similarly when I incurred loss of 100, give me 30% 30 refund. Now this doesn't happen. Rather than that, what taxation authorities do, listen to the concept. They say, okay, in year 1 your loss was 100, in year 2 your profit was 200, and in year 3 your profit was 250. Okay, what you want is that you get a refund of 100 loss and 30% refund, 30 income. Then on 200 you pay 30% tax, 60, and on the 250 you pay 30% tax, 75. Now what taxation authority do is that we won't refund you, but do one thing. You incur loss of 100. You want a refund, right? You won't get refund. Do one thing. If you get a loss of 100, don't pay any tax. Loss, don't pay any tax, and do this. Adjust your losses of 100 against future profits. Adjust your loss of 100 against future profits. In future your profit was 200, adjust 100 against that. What does remain? 100, and pay 30% tax on that. That is 30. And year 3 250 profit, 30% tax, 75. Now what happened? Listen carefully. Go to this case. What were you wanting? You were wanting that you pay 60 tax, you pay 75 tax, 60 plus 75, you pay 135 tax, and you get a 30 refund. So your net payable was 105, right? This is your wish, that you will pay 60, you will pay 75, but you should get 30 refund. This was your wish. So your net tax payable would have been 105. If they allow you to adjust losses against future profit, this is called losses carry forward. You didn't pay any tax in year 1. But in year 2, you paid 30, and in year 3, you paid 75. 30 plus 75, you ended up paying the same what was your wish, 105. This is called losses carried forward, that when you get loss, don't pay any tax, you won't get refund, but adjust those losses against future profits, so that future profits get reduced and tax gets reduced. You will end up reaching the same figure as you have wished for. Okay, this is the completion of the second topic, losses carried forward. Okay, we have covered tax allowable depreciation, deduct depreciation, and then add back it, and then losses carried forward, that whatever your losses are, don't pay tax, adjust that against future profits and pay tax. Now the thing is that sometimes this is mentioned that you are allowed to carry forward losses, so obviously you do that. Sometimes it's mentioned that government doesn't allow losses carried forward, you cannot do that in the question, and sometimes the question is silent. You don't know whether you are allowed to carry forward loss or not. In that case, you can take whatever assumption you want and you can write that, you will gain full marks. Okay, any questions regarding to this? Wajat Harun, in the same manner you just sent me a message how to ask questions to tutor, you can write your question here. Gurudev, there is no restriction unless the question specifically mentioned that you can do it for 2 years or 1 year or 3 years. Yeah, Mira, you're right. No, Musa, actually we are adjusting it against future profits. So obviously we have set off that impact. Ayuni, same thing. If the loss is in year 2, you can adjust it against the future profits year 3. Mira Purnama, actually I can't answer you if the government has any limit. If there is any limit, they can obviously mention that in the question. Muhammad Yunus, same thing, that we are adjusting it against future profits, so the cash effect is getting set off. Elvin, I said 3 things. The first thing, if it mentions to do carry forward loss, you can do that. If it says not allowed, you cannot do that. Or if it's silent, you can assume anything. Yeah, Gloria, from the full profit of next year. No problem. Whoever, actually around 100 plus students have joined the WhatsApp group I've just seen, and those who have are unable, they can just drop me a message privately on WhatsApp. I've shared my number and I can send them the link. Yes, Anjali, you are right. Yes, Babar. Okay, let's move forward. Else I will get a message, sir, please increase speed or move forward. Jason, if your second year profits were 50, just adjust 50 from year 2 and remaining 50 from year 3. No problem in that. Rohan, I just answered to other student that if let's suppose your loss is 500 and year 2 profit is 200, only 200 can be adjusted and the remaining 300 will be adjusted next year. Now the third issue, the small one, and you all will be familiar with that, is working capital. Okay. Now for working capital, you need to take care of one thing, that working capital is the amount of cash required for day-to-day operations. Okay, working capital is the amount of cash required for day-to-day operations. companies usually invest working capital at the start of the project, year zero. Okay. Whatever working capital has been invested, it is recovered in the last year. I think you all know this, that whatever working capital is invested at the start of the project, obviously all of that is recovered in the last year. Now we are going towards topic 4, that is currency conversion. For that, I am writing some stuff. I would request you to please copy that stuff so that I can explain it to you. Samina, it might be a problem with your internet connection. That's why we have taken on the recording stuff as well, because no one is facing such problems. Please copy this. Yunus, I think you cannot do anything if the losses are in last year, and that has never been an instance, and neither it can be. It's just your personal thought. Yes, Hamza. Yes, Gurudev. No, Yusuf. Babar, that's what I'm going to teach you shortly. Aisha, it's a problem from your end. Mohammad Ali, I should think you should wait for the question to be solved shortly so that your thing gets cleared. Okay, so we are moving towards the fourth issue. That means we are moving closer to the question. The first issue, which we discussed with you, was tax allowable depreciation. Depreciation should not be deducted in NPV computation because it's a non-cash item, but this will overstate our profit, overstate our tax. So you were taught that deduct depreciation so that your profits fall, your tax fall, make a realistic figure of tax, and then add back depreciation so that the effect of depreciation gets cancelled. Okay. Second issue was losses carried forward. In case you have earned profit, pay tax. If you have earned loss, don't pay tax. Adjust those profits against adjust those losses against future profits so that future profits gets reduced, taxes gets reduced. This is losses carried forward. Third thing was this working capital. Whatever working capital we have invested, it will be recovered right at the end. Okay. Now the fourth issue is regarding currency conversion, and for currency conversion, this has been an area where there have been instances of many mistakes. And surprisingly, when I teach this in any ACCA webinar, even though exams are around 15-20 days away, still students make mistakes in that. Okay. Now, how to convert currency? You have all seen ACCA past exam questions that either currencies are converted by multiplying or converted by dividing. This is not just something random which you can do it anytime or learn by looking at the past paper questions. You have to understand the concept. Now, currency conversion basically depends on a concept called quotes. Okay. In practical world, there are two types of quotes. In practical world, there are two types of quotes. Okay. One is called indirect quote and one is called direct quote. Okay. In practical world, there are two types of quotes. One is called indirect quote and one is called direct quote. You have to learn the principles, three principles of either quote in order to be able to place it. Okay. Now, what is indirect quote? Indirect quote is basically a technical name of a sign where foreign currency is in numerator and local currency is in denominator. Whenever foreign currency comes in numerator and local currency comes in denominator, we say that the quote we have received is indirect quote. Okay, like for example, I am in Pakistan and I see somewhere dollar over PKR. I see somewhere dollar over PKR. So what is the local currency of Pakistan? PKR. It's coming in denominator. This is indirect quote. Okay. Or for example, I am in UK. Okay. And I see somewhere euro over GBP. Now, what is the local currency of UK? GBP. It's coming in denominator. That's an indirect quote. Now, if somewhere there is indirect quote, remember, you need to divide to convert from one currency to another. These rules are not made by me. These are national practices of currency conversion, that whenever you find indirect quote, you just simply divide to convert from one currency to another. And whenever you see indirect quote, you will be seeing two rates in front of your screen, or money changer or newspaper or internet website. Wherever you are seeing, you see two rates. If there is indirect quote, the lower rate is the buying rate and the higher rate is the selling rate. Okay, remember these principles. Okay, if some quote is indirect quote, the first thing, whatever you have to do is to find the quote. If you see that your local currency is coming in denominator and foreign currency is coming in numerator, we call it an indirect quote. Okay, once you find indirect quote, you need to divide to convert from one currency to another. And in indirect quote, when you see two rates, lower is the buying, higher is the selling. Okay, other thing. Let's suppose you are in US and you see some dollar over pounds. Now, what is the local currency of US? It's dollar. If local currency is coming in numerator, that's a direct quote. If local currency is coming in numerator, that's a direct quote. Now, when there is a direct quote, remember we multiply to convert from one currency to another. It's not random. If it's indirect quote, foreign in numerator, local in denominator, indirect quote. Divide to convert from one currency to another. Lower is buying, higher is selling. And when you see local currency numerator, foreign currency in denominator, it's a direct quote, indirect quote, you need to multiply. And when you multiply, remember, lower it is selling, higher it is buying. Okay, these principles are not made by someone random. These are standard practices. Now, I have visited many countries, and maybe many of you would have visited countries as well. I was always confused when I didn't have this knowledge that sometimes money changers divide and some money changers give me receipt multiply. It entirely depends on quote. If your local currency is in denominator, it's an indirect quote. You always have to divide to convert, lower buying, higher selling. And when you have a direct quote, that's local currency numerator. In that case, you have to multiply and lower selling, higher buying. Okay, any questions regarding this you can ask. I'm writing the final issue, and after that we will be moving towards questions. Okay, so how do I know when it's a direct quote or indirect quote, Chioma? Obviously, we will be discussing a question shortly, but remember, it entirely depends on what is in numerator, what is in denominator. Okay, I have said if foreign currency is in numerator and local currency is in denominator, that's an indirect quote. The other two lines have to be followed, then divide, lower buying, higher selling. And if it's a local currency numerator, foreign denominator, then we know it's a direct quote, then multiply, lower selling, higher. At the rate of the main driver I've already mentioned is this. Mohammad Afzal, wait for it, please. Every rate is for us. Okay, now again, this webinar has again proven this thing. There are around 35 to 40 questions regarding this quotes, because I know it from the past thing that people are usually confused in this. Okay. And again, out of this 3540, when I was scrolling down, please speed up, please speed up. I can speed up, I won't speed up. If anyone wants to watch it quickly or he considers speed slow, please immediately leave the session. After a few hours, take the recording, because recording, you have a fast forward button. Please fast forward it so that everything is very, very fast. At the moment, around 200, 220 students, no need to, I can't go fast because others would then say to be slow. Please don't do this. I have requested this multiple times now. Now let's just make these things in more detail. Okay. Like let's suppose I'm in Pakistan. Okay. And I see a rate dollar to PK 0.01012. Okay. And someone asked me to convert $1,000 to PKR. Someone asked me to convert $1,000 to PKR. Okay. How to do it? Okay. It's not just something random. You need to understand this concept that someone has asked me to convert $1,000 to PKR. Okay. Now I have to understand this thing, that the first thing I need to decide is what is the quote. Now I'm in Pakistan. What is the local currency of Pakistan? It's PKR. It's coming in denominator. So the first thing, it's an indirect quote. The first thing, it's an indirect quote. Okay. Second thing, if it's indirect quote, will you multiply to convert or divide to convert? I will divide. Okay. And the third thing, lower rate is the buying rate and higher rate is the selling rate. Okay. Lower rate is the buying rate, higher rate is the selling rate. Okay. Now, if someone asks you to convert $1,000 to KR to convert, I will divide. If I'm buying, I will divide it with buying rate. And if I'm selling, I will divide and sell it. This is how things happen. Okay. Similarly, let's suppose this. Okay. The rates are dollar to euro. Okay. 0.8 dash 0.85. The rates are dollar to euro, 0.8 slash 0.85. Okay. And someone asked me to convert 1,000 euros to dollars. Okay. It doesn't happen randomly. You have to decide. I'm in US. What is local currency of US? It's USD. It's coming in numerator. That means it's a direct quote. If it's a quote, how I convert? Multiply. And the lower rate, selling rate, higher rate is the buying rate. 0.85 higher is the buying rate. Now, how will I convert $1,000 to $1,000 to dollars? I'm buying, if I'm selling, my selling rate. Okay, so this is how things work. Now, there are two objectives of dealing this particular thing here. Mira, whatever we are buying and selling, we are buying for selling for ourselves. Why do we need to think about the money changer? We are not the money changer. We are a company. So whatever is the buying rate, whatever is the selling rate, it's for us. It's not for the company. Again, the same question from one more student, whether these are the buying selling rate for the money changer or for me. I don't get it that we are buying, we are selling. So why would we need to see the rates for the money changer? These buying and selling rates are for us, not for the money changer. Amna, I will answer your question once I'm in the question. I will be solving the question and then I will tell you how to deal with the issue you are answering, because at the moment it's not possible to cover your question. Okay, so now we have discussed this adjustment issue as well, that I'm not able to understand now. This is the first time, this is my fourth or fifth webinar with ACCA, that people are constantly advising me, don't take so much time, please increase the speed, please be a bit faster. I think you should come in my place and you should start giving the lecture and I should go in your place. Whoever is thinking that the lectures are slow, please, it's my, with due respect, request from you that please go leave the session, take the recording later and watch it in a fast forward mode, 2x speed or 3x speed. Don't bother everyone here. Here we are for the students. There are many questions regarding this. Don't know that people are so much confused in this particular area. So I'm trying to help them out. Last issue called parity. Okay. For this, again, you need to copy some stuff with respect to this priority theories. And then, okay, thank you, Temitop. You are the first one who is saying speed is okay. Otherwise, I am constantly receiving just the requests that increase the speed, increase the speed. I don't know why we should rush so much. Obviously, we have to one question, we will be able to do one question. It's important to understand the concepts rather than just, you have the option of recording, you can take the recording and increase the speed. I've told this 5 to 6 times in the class. Now, this never happens in a webinar, seriously, that students start advising. Okay, copy the stuff for parity theory as well. Yeah, I think I should just ignore those messages. Why I'm saying them again and again. Fazlul Karim, this is the chat box through which you should write me where you have messaged this. Okay, now. So this is the last issue which we are dealing, and after that we will be going towards a question. The past paper question, which I definitely believe is going to cover the issues which you might have not got answer in your chat messages. So I can assure you that once we move towards the question, we will be able to address that. Okay. Okay, so the last issue which we are going to discuss here is the issue of parity theories. Now, what is the purpose of parity theories? Okay, obviously, if you are entering into a project, and the life of project is, let's suppose, 5 years. If you are entering into a project and let's suppose the life of project is 5 years, obviously you need a 5-year rate, right? Okay, similarly, if you are entering into a project and the life of project is 4 years, obviously you need a rate of 4 years, correct? Okay, if you're entering into 3-year project, obviously you need a rate of 3 years. Okay, now sometimes if the project is for 4 years, you are given the rates for 4 years. That's not a problem in that. Okay, similarly, if let's suppose you are having a project for 5 years, sometimes the question gives you rates for 5 years. Okay, but what happens sometimes that if it's a 5-year project or a 4-year project, you need rates for 4 years, but you are not given rates of 4 years. You are only provided with spot rate. You are only provided with spot rate. Okay, and with those rates, either you are given inflation rates of countries or interest rates of countries. With these spot rates, either you are provided inflation rates of countries or you are provided interest rates of countries. Okay, what to do in that case? What to do in that case if you are provided with the spot rates only? Spot rate means 2 days rate. Spot rate means 2 days rate. Okay, year 0 rate. Okay, let's suppose it's 50 and the project is of 3 years, so you need a 3-year rate. Okay, in that case, if you are provided with spot rates only, okay, and you need rates for future years, you have to use either the formula of purchasing power parity theory or you have to use the formula of interest rate parity theory. Now, what is the formula of purchasing power parity theory? The formula of purchasing power parity theory is S1 is equals to S0 into 1 plus HC over 1 plus HB. S1 is the future rate. S1 is the future rate which you are planning to find. Okay, S0 is the current spot rate. HC and HB, they are inflation rate of both countries. Inflation rate of country 1, inflation rate of country 2. Now let's suppose I have a project of I say 3 years. I have a project of 3 years. Okay, I have the rate 8 Turkish lira per dollar. I have the rates 8 Turkish lira per dollar. Okay, this is the spot rate. And I say inflation rate in Turkey is 10%. Inflation in US is 8%. Okay, now what will you do to find the future rates? What will we do to find the future rates? Okay, now you are given with spot rate. Spot rate means you are given S0. Spot rate means you are given with S0, right? S0 is a Turkish lira per dollar. Now, if you need inflation rate for year 1 year later, you apply the parity formula S1 is equals to S0 into 1 plus HC over 1 plus HB. Now, future rate S1 is going to be S0 8 into 1 plus HC inflation rate of country 1, then HB inflation rate of country 2. Okay, what is country 1, country 2? Now, the country numerator is always country 1. country numerator is always in country one as far as parity theories are concerned. You see, in numerator, the country was Turkish lira. So put Turkish currency rate 10% in numerator and dollar US inflation rate in denominator. Okay. So if we calculate this, this becomes 8 into 1.1 over 1.08. Okay. This is going to be 8.148. How? I took S0 8 into 1 plus inflation rate in one country and 1 plus inflation rate in another country. In numerator, the country one was Turkish lira, so 10%, and in denominator it's 8%. It's saying 8.148. This is the year inflation rate after 1 year, because you took inflation rates of per annum, you get a 1 year rate. Now let's suppose you need rate after 1 more year, after 2 years. Again, for future rates, it's always parity rates. Now the year one, you have to move from year one to year two. The year one rate becomes the current spot rate, 8.148 into 1 plus inflation rate 1 plus inflation rate country 2. Country 1 is Turkish lira, which is in numerator, 10%, 8%. You get the year 2 rate. Now if you have to go to year 3, the year 2 rate becomes the current rate, spot rate, into 1 plus inflation rate in country 1, 1 plus inflation rate in country 2. Similarly, let's suppose I say raise 160 PKR per dollar, 160 PKR per dollar. Interest rate in US 5%, interest rate in Pakistan 6%. Question asks you to find future rates. Question asks you to find future rates. The question won't ask you if you have a 5-year project, you need rates for 5 years. If you have a 4-year project, you need a rate for 4 years. Okay. Now, if the question asks you to find future rates, either it's possible through purchasing power parity theory or interest rate forward theory, the formula is the same. Either you need inflation rates or interest rates. In this question, you are provided with interest rates. Now, take the spot rate. What is the spot rate? 160 into 1 plus interest rate, IC, country 1 over country 2. So what is country 1? What is country 2 saying? Whatever currency is the numerator in spot, that's country 1. So Pakistan is country 1, 6%, and US is country 2, 5%. Okay. Now, if we do this, 160 into 1.06 over 1.05, it becomes 161.5. This is after 1 year. Now, if you go to year 2, the year 1 rate becomes the current rate into 1 plus interest rate or inflation rate, country 1 or country 2, that's it. The year 2 becomes the current, then you go to year 3, then year 4. Either you will be given spot rate for sure. Either you need to put inflation rates or interest rates, it depends, whatever is given in the question. Just put interest or inflation rates and get your answer. Now, this is the end of all our 5 topics which we plan to discuss. I can take questions. If you want to ask any questions, you can ask regarding this. Spot will always be given. Don't worry about spot rate. Thermodome, you have to see the spot rate. Whatever is given in numerator and spot rate, that's country 1. And whatever is given in denominator, that's country 2. At the rate of same, I told you that you are given 8 Turkish lira per dollar. So look at the spot in numerator, it's Turkish lira. So that's going to be, Turkey is going to be country 1 and country 2 is going to be US. Yes, it's 163.04. It's the same thing, Srindi. Similarly, I gave you rate. Syed Mubin, you raised a very, very good question here. There is no quote concept in parity theories. There is no quote concept in parity theories. Remember, the quote concept was for conversion. In parity theories, you will be given spot rate, and either you will be given interest rate or either you will be given inflation rate. Just to take the spot rate, multiply it with 1 plus inflation rate or interest rate over 1 plus inflation rate or interest rate. Country 1 is in numerator, country 2 is in denominator. Look at the spot rate. Whatever is in numerator, that's country 1. Whatever is in denominator, that's country 2. Keshav, you're asking, should we use inflation rate or interest? It depends. Either you will be given interest rate in the question or inflation rate in the question. Okay. Sam, and formula would be provided, but it's not something hard. You just have to take a spot into 1 plus inflation or interest rate over 1 plus inflation or interest rate. A forward rate or a future spot rate is the same. Yes, Vajat, you are right. Okay, so I think after discussing all these 5 concepts, okay, you have the basic discussion of all things. Let's just take a short 5-minute water or coffee or tea, whatever you like, break, and then I will be starting the question. Okay. And those who are willing, very willing to ask what will be covered today, whether this will be covered, whether this won't be covered, I think they should attend the full lecture. You will get answer yourself, what will be covered, what won't be. Afzal, sorry, not a 15-minute break. I just told it's a 5-minute break. Okay, so you all should open the handout. It's in the handout tab right below the questions tab so that I can read the question and we will start discussing. There is a bit of a technical issue because I am unable to uh, see the questions tab. So I've just messaged the ACCA organizer and we need to wait for 1 or 2 minutes till he solves this issue. यार ये मैं प्रेजेंटर से हट गया हूँ तो उसको जरा सी करें आप प्रेजेंटर और पैनलिस्ट से Okay, till this is getting back, I would just advise all of you to open the handout of day one. It's in the handout section uh, and start reading the day one question. I will just shortly be reading it myself, but I advise you all to just start reading it. जी ठीक है ठीक है Okay, now I'm starting reading the question because now we will be doing the day one question, and the 5 issues which I've told you, the issue of capital allowances and the issue of losses carried forward and the issue of currency rates and the working capital and that final the parity. All these you will be able to see that in the question, and so that once you are done, you will be able to have a clear understanding of how things work here. Okay. Now the first thing is that the question we are doing, it's of investment appraisal, and I'm just reading the question. Please pay attention. Since becoming independent just over 20 years ago, the country of Megam has adopted protectionist measures which have made it difficult for multinational companies to trade there. Okay. Now, since becoming independent over 20 years ago, the country of Megam has adopted protectionist measures which have made it difficult for multinational companies to trade there. However, recently, after discussions with the World Trade Organization, it seems likely that Megam will reduce its protectionist measures significantly. Now, there is a country called Megam, and the country of Megam has adopted protectionist measures. Now, what exactly are protectionist? Protectionist measures are such measures which is implemented by country to protect its local industry. Like, for example, the government of Pakistan wants to protect the local automobile sector so that foreign companies don't come here and just take all the market share from them. They give subsidies, benefits, duty exemptions, benefit to local manufacturers. These are all called protectionist measures. So the country of Megam has adopted protectionist measures which have made it difficult for multinational companies to trade there. However, recently, after discussions with World Trade Organizations, they discussed World Trade Organizations. It seems that Megam will reduce protectionist measures significantly. Will reduce protectionist measures significantly after discussing with World Trade Organizations. Encouraged by these discussions, Jamura Company, a company producing packaged foods, is considering a project to set up a manufacturing base in Megam to sell its goods there and in other regional countries nearby. Now, encouraged by these discussions, there is a company called Jamura Company. It is considering a project to set up a manufacturing base in Megam. So remember, after discussions with the World Trade Organization, Megam was trying or thinking to reduce protectionist measures significantly. So Chomra Company, a company which produces packaged foods, is encouraged by these discussions, and it is considering a project to set up a manufacturing base in Megam to sell its goods there and in other regional countries nearby. An initial investigation costing $500,000 established that Megam had appropriate manufacturing facilities, appropriate transport links, and a reasonably skilled but cheap workforce. The investigation स्क्रीन आपको ब्लू नजर आ रही है मेरी? नहीं, मेरी स्क्रीन यहाँ से तो मुझे तो नहीं लग रहा स्टक हुई भी. नहीं स्टक हुई है. अनशेयर करके दोबारा शेयर कर. म्यूट कर.
पीसी हैंग हो गया यार। मैं इसको रिस्टार्ट कर रहा हूँ, ठीक है। हाँ तो फिर वापस आता हूँ मैं, आप एक्टिव रहिएगा, ठीक है। ओके, मैं आपको व्हाट्सएप कर रहा हूँ।
Hello. Please reply. Are you able to hear me? Okay. Just wait for a screen for a minute. Okay, so we are so sorry. Approximately your around 30 minutes were lost due to this technical glitch, but don't worry, we will compensate this and we will extend the session because the 5 topics which I have taught you, we need to solve a question regarding that. Okay, so I want you all to quickly open the handout and we will start. And we cannot, please don't ask whether we will finish on time or not. It's 11:30 our ending time, but we will extend it by 30 minutes because our 30 minutes have been lost. Now the question which we are doing, it's of investment appraisal, and in investment appraisal we all know that there are 5 issues which I've just discussed with you: the issue of capital allowances, tax allowable depreciation, then losses carried forward, then the currency rates, then the working capital. In currency rates you have to understand the quotes: if foreign numerator, local in denominator, indirect quote, then divide, lower buying, higher selling, and if local currency numerator, direct quote, multiply, lower selling, higher buying. Finally, how to find future rates. You're given spot rate, that's S naught. And either you're given to inflation rates or to interest rates. Just put country 1 in numerator, country 2 in denominator, whatever is in the spot rate, you get the forward rates. Okay. Now, obviously, we have to answer question on ACCA platform. So let's just go to the ACCA platform. Now, when you will open the ACCA real exam, those who are given computer-based exam, it's like this, the software. You have to first read the introduction. Next, instructions general, that what are the main features of this software. This is a real exam scenario, right? How to navigate, how to flag, etc. Okay, workings, where to show workings, you need to read all of them, and then instruction 4. Next. Okay, this is important note about PDF and stuff like that. It's not relevant here. Next. If you are ready to begin your exam, please click yes. If you are not ready, please click no. So when you are ready to begin your exam, yes. Okay. Now, section A, the section contains 1 question. The question is worth 50 marks and compulsory exam is worth 50 marks. And next. Okay. Now, when you will open this question, this is the first question. Okay. There is exhibit, that is background and detail of the company. You will click this to get the question and detail of the company, then requirement. Okay. So let's just read the background. Okay, so the question states, since becoming independent just over 20 years ago, you all have the question in handout as well, and you can watch from my screen as well. It's up to you. Since becoming independent just over 20 years ago, the country of Megam has adopted protectionist measures which have made it difficult for multinational companies to trade there. However, recently, after discussion with the World Trade Organization, it seems that Megam will reduce protectionist measures significantly. So the country of Megam has adopted protectionist measures to protect its economy, but discussions with World Trade Organization, it seems likely that Megam reduces its protectionist measures. Encouraged by these discussions, Chumra Company, a company producing packaged foods, is considering a project to set up a manufacturing base in Megam to sell its goods there and in other regional countries nearby. So there is a company called Chumra Company. It produces packaged foods. It is considering a project to set up a manufacturing base in Megam to sell its goods there and other regional countries. An initial investigation costing $500,000 established that Megam had appropriate facilities, adequate links, and cheap workforce. The investigation concluded that if the protectionist measures were reduced, demand potential for Chumra's products looked promising. It is also felt that an early entry into Megam would give Chumra an advantage over its competitors for a period of 5 years, after which current project will cease due to the development of new advanced manufacturing processes. Now, after discussions with World Trade Organizations, it seems that Megam will reduce protectionist measures. So Megam country will reduce protectionist measures. Encouraged by these discussions, Chumra Company, which produces packaged foods, is considering a project to set up a manufacturing base in Megam, that country. Chumra is considering a project to set up a manufacturing base. An initial investigation costing $500,000 established that Megam had appropriate facilities, adequate links. Now, investigation costed $500,000, which established that Megam had appropriate facilities and links. This $500,000 is believed to be a sunk cost because this has already been spent. In investment appraisal, the NPV, you take future cash flows of year 1, year 2, year 3. Whatever has already been spent is a sunk cost that should be ignored. So this initial investigation costing $500,000 has established that Megam had appropriate facilities, adequate links, and reasonably skilled but cheap workforce. This investigation costed $500,000. It's already spent, won't be spent in the future, sunk cost. Okay. Megam's currency, the peso, MP, is currently trading at peso 72 per dollar. Megam's currency is the peso. It is currently trading at peso 72 per dollar. Okay, so Megam's currency is the peso. It's trading at peso 72 per dollar. Setting up a manufacturing base in Megam will require an initial investment of peso 2,500 million immediately to cover the cost of land and buildings, peso 1,250 million, and machinery, peso 1,250 million. So when you are setting up a manufacturing base in Megam, remember, whenever you set up a base in any country, all inflows, outflows would be in that country's currency. Like for example, you establish a plant in UK. So all costs and income will be in UK pounds. If you set up a plant in US, all inflows and outflows will be in US dollars. Similarly, Chumra is considering setting up a plant in Megam. So setting up a base in Megam will require investment of peso 2,500 million, because since you are investing in UK, all inflows outflows in GBP. Investing in Megam, all inflows outflows in that country's currency. Remember the rule. If you're investing in Pakistan, all inflows outflows in Pakistani rupees. So setting up a manufacturing base in Megam will require investment of 2,500 million pesos. That's fine. You're investing in Megam in that country's currency, peso 2,500 million. To cover land and building, peso 1,250 million, and machinery 1,250 million. Tax allowable depreciation, that's depreciation. It's available on machinery at an annual rate of 10% on straight line. Now, tax allowable depreciation is available on machinery only. You all know that depreciation isn't allowable on land and buildings. It's only allowable on machinery. Okay, and that's what the question states, that depreciation is available on machinery at 10% straight line. A balancing adjustment will be required at the end of the year 5 when it is expected that machinery will be sold for 500 million. What is this balancing adjustment? A student asked as well. I will just explain it shortly. So balancing adjustment will be required at the end of the year 5 when machinery will be sold for peso 5. You purchase machinery for peso 1,250 million. Obviously, at the end of year 5, it will be sold scrap for 500 million. The market value of land and buildings in 5 years' time is estimated to be 80% of current value. So market value of land and building in 5 years is estimated to be 80% of current value. These amounts are inclusive of any tax impact. Chumra will require piso 200 million for working capital immediately. It is not expected that any further injections of working capital will be required for 5 years. When the project ceases at the end of 5th year, the working capital will be released back to Chumra. Exactly what I told you. That Chumra requires piso 200 million for working capital, and it is expected that any further injections are not required, and at the end of 5th year, the working capital will be released back. Okay. So you are seeing that whatever investment is being made in Megam, that's in pesos. Land and building, piso 1250 million, machinery, piso 1250 million, working capital, piso 200 million, that's normal. When you invest in UK, all inflows outflows in UK currency. When you invest in Megam, all inflows outflows in pesos. Production of the packaged foods will take place in batches of product mixes. These batches will then be sold to supermarket chains, wholesalers, distributors, and Megam and its neighboring countries, who will repackage them to their individual requirements. All sales will be in pesos. Again, you are investing in Megam, all sales in pesos. The estimated average number of batches produced and sold each year is given below. So batches produced and sold in year 1 is 10,000, then 15,000, then 30,000, then 26,000, then 15,000. Current selling price for each batch is estimated to be piso 115,200. Current selling price means today's, now, year 0 selling price, piso 115,200. Current selling price, today's selling price, now selling price is piso 115,200. The cost related to producing and selling each batch are currently estimated at piso 46,500. Currently, today, piso 46,500. Everything in pesos. In addition to these costs, a number of products will need a special packaging material which Chumra will send to Meg. In addition to these, a number of products will need a special packaging material which Chumra will send to Megam. Currently, the cost of special packaging material is $200 per batch. Training and development costs relating to production batches are estimated to be 80% of production and selling costs, excluding cost of special packaging in first year, before falling to 20% in second year and nil for remaining years. It is expected that costs relating to production and sale of each batch will increase annually by 10%, but selling price and special packaging costs will only increase by 5%. Inflation rates are given. The current annual tax rate in Megam is 25%, and Chumra pays tax at a rate of 20% in the country where it is based. Now listen this line carefully. The current annual corporation tax rate in Megam, where you're investing, is 25%, and Chumra pays tax at 20% in the country where it is based. We don't know yet where Chumra is based, but the current tax rate is 25%, and Chumra pays tax at a rate of 20% in the country where it is based. Both countries' taxes are payable in the year the liability arises. There is no delay. A bilateral treaty exists between the two countries which permits offset of overseas tax against any tax liabilities Chumra incurs on overseas earnings. Bilateral treaty exists between two countries means if a country has treaty with other, if tax is paid in one country, you don't need to pay tax again in other country. Okay, what is the meaning of this? I will shortly explain. The risk-adjusted cost of capital applicable to the project on dollar-based cash flows is 12%, which is considerably higher than the return on short-dated bills is 4%. So risk-adjusted cost of capital is 12%. The current rate of inflation in Megam is 8%, and in the country where Chumra is based is 2%. So the current rate of inflation in Megam is 8%, and in the country where Chumra is based is 2%. So inflation rate in Megam is 8%, and the country where Chumra is based is 2%. Where is Chumra based? I still don't know. Okay. It can be assumed that these inflation rates will not change for the foreseeable future. All net cash flows from the project will be remitted back to Chumra at the end of each year. Now, this is quite normal. Chumra is based in a country. What is that country? I still don't know. But Chumra is considering setting up a plant in Megam, another country. When it earns from Megam, it won't let the cash remain there. It will remit it back to its own country. Like, for example, I'm in Pakistan. I invest in a project in UK. I earn GBP there. I won't let that GBP remain there. I will bring it back, remit it back to my own country. A company is in US, it invested in Europe, earned in euros. It won't let the euros remain there. It will remit them back to their own country. So Chumra is based in a country and it invested in a project in Megam. So any amount it earns from Megam, it will be remitted back to Jumra. Jumra's finance director is of the opinion that there are many uncertainties surrounding the project and has assessed that the cash flows can vary by a deviation of 35% because of uncertainties. That's normal. Cash flows can deviate by 35%. Recently, Bulut company offered Jumra the option to sell the entire project to Bulut for 28 million at the start of year 3. Jumra will make a decision at the end of year 2. Now this ends the question. Now where should I refer for the requirement? This was exhibit, background in detail. For requirements, I have to click on requirement. This opens a second tab in the exam. Here are the requirements. You can zoom it if you want. Now remember, there was a constant discussion in the question in the country where Jumra is based, in the country where Jumra is based. It was investing in Megam. In the country where Jumra is based, that was not something mentioned openly. But here, what my mindset says, the only other currency in the question apart from peso was dollar. The only other currency in the question apart from peso, the only other currency was dollar. That means the country where Jumra is based is likely to be US. Sometimes it mentions this openly, sometimes hide things. You have to be smart enough. If it's not mentioned, then obviously it's the other country's currency, dollar. Okay, I'm doing requirement B2 with you. B2, prepare an evaluative report for board of directors which addresses the following parts and recommends an appropriate course of action. B1, an estimate of the value of project before considering Bulut's offer. You need to find value of project before considering Bulut's offer. Ignore Bulut's offer in the last paragraph. Here it is, Bulut's offer. Recently, Bulut offered Jumra the option to sell the entire project for 28 million. Ignore this, okay? And you are required in requirement to find the value of the project before considering Bulut's offer. Ignore the last paragraph, Bulut's offer, and find the value, ignoring Bulut's offer, okay? Now, how will you answer this in the exam? Before moving towards the answer, I just want to take a bit of questions. If they have any problems regarding the question. Ayuni, you don't have to write points. It's fine asking you to find the value of project. It's a calculation requirement. Why would you write points in that? Now, if the screen of mine goes off for hardly a second, that's from my point. I just switch the screen, so it just gets off for a second or a bit. If it's a long pause, then it's a problem, like it happened for 30 minutes. But if it's just a 1 second, 2 second issue, don't worry about that. Okay, so there are no questions. So Hamza, I can't answer this question that why is the market value of land and building 80% given? Because that's the instruction of the question. You cannot ask that why the scrap value is 500 million given or why the market value is 80% given. That's the instruction of the question. Why the selling price is 116,500 given. It's the instruction of the question. You have to follow the instruction as it is. Deviation means Namit, cash flows can vary. That happens in investment appraisal because when investment appraisal is about forecast. So forecast carries uncertainties. And Hamza, again, how it is going to be used, let me answer it. Do the solution, you will get your answer. Okay. Okay, let's resume. Just a quick get back to the question. I need you all to pay attention to this question again. Okay. I'm just repeating it so that we can solve the solution. Now, the paragraph 1 says, since becoming independent over 20 years ago, the country of Megam adopted protectionist measures which made it difficult for multinational companies to trade there. However, after discussions with World Trade Organization, it seems that MEGAM will reduce protectionist measures significantly. Okay. Encouraged by these discussions, Chumra company, which is producing packaged food, is considering a project to set up a manufacturing base in MEGAM. Chumra is based in another country, US. It is considering setting up a plant in MEGAM. Initial investigation costed 500,000, sunk cost. Now, if Chumra is in US investing in MEGAM, all inflows outflows will be in the investment country's currency, that is pesos. So MEGAM's currency, peso, is currently trading at peso 72 per dollar. One setting up a base in MEGAM will require investment of peso 2,500 million immediately to cover land and building, peso 1250 million, and machinery 1250 million. Tax allowable depreciation is at 10% straight line basis, balancing adjustment in the final year, and the expected machinery will be sold for 500 million. Market value of land and building in 5 years time is 80% of the current value. Amounts are inclusive of any tax. Chomra will require peso 200 million for working capital, and production and sales year 1, 2, 3, 4, 5 units are given. Current selling price peso 115,200. Cost relating to production and selling peso 46,500. Number of projects will need a special packaging material which Chumra will send to MEGAM from US. Cost of the material is $200 per batch. Training and development costs 80% of the production selling cost in first year and fall to 20% second. Tax rate in MEGAM 25%, and Chumra is based in the US, that's 20%. Okay, both taxes are payable in the year the liability arises. Okay, risk adjusted cost of capital 12%. Then in this paragraph, it was saying that current rate of inflation in MEGAM is 8%, and the country where Chumra is based, US, is 2%, and inflation rates will not change. All net cash flows will be remitted to Chumra, and the variation is 35%. And Bulud offered Chumra the option to sell the entire project. You need to ignore that and do requirement B2, which states value of the project before considering Bulud's offer. Okay, now how to answer this? Now you can see on the left side of the software of the exam, there are response options. Either solve it on spreadsheet or Word. It's your choice. But obviously calculations are more better on spreadsheet. They are fast. You will just see. I clicked on spreadsheet. The spreadsheet got opened. I just extended the spreadsheet. Okay, now I'm doing requirement B1, that I am finding value of the project before considering Bulud's offer. Okay, so this is what I'm about to do. I am finding the value of the project before considering Bulud's offer. B1 requirement. Okay, if you need to zoom, you can zoom a bit as well. Okay, it's fine, let it remain there. Okay, so you need to find the value of the project before considering Bulud's offer. Right. Now, what does value of project means? Value of project means NPV. What does value of project means? Value of project means NPV. You need to find value of project. Value of project means NPV of project. Ignore the last paragraph, Bulud's offer. You need to find value of project. Now, how to find NPV? Now, let me advise you a few points. Okay. Whenever you are given a question of NPV, the first step of yours should be currency rates. Whenever you are given a question of NPV, the first step of yours should be currency rates. Okay. Now, what seems to be the life of project? I think it's a 5-year life. Remember, if the life is 5 years, remember one thing, you need currency rates for all 5 years. Okay, get this point, that if the life of the project is 5 years, you need currency rates for 5 years. Okay, I have seen many questions, you have done many questions while preparing, that some questions give rates for all 5 years. Okay, but sometimes the rates for 5 years are not given. If it's given, just copy paste. If it's not given, you need to find it. Now, if you see you are given currency rates, peso per dollar. See in the question, Megam's currency, the peso, is currently trading at peso 72 per dollar. You are given peso per dollar. You are given peso per dollar. Currently trading, currently means today, 72. Currently means today, 72. Okay. Current means today. You are not given rates for the next 5 years. You are not given rates for the next 5 years. Okay. If you are not given rates for the next 5 years, you have to find it. There is no other option. Okay. And how will you find the future rates? Either use the formula of purchasing power parity theory or either use the formula of interest rate parity theory. Depends on that. The formula is the same. If inflation rates are given, use purchasing power parity theory formula. If interest rates are given, use interest rate parity formula. Go back to the question. See the third last paragraph. The current rate of inflation in Megam is 8%, and in the country where Chumra is based, it's 2%. So you're given inflation rates. That's it. Either interest rates are needed, inflation rates. So inflation rate in Megam is 8%. And inflation rate in country where Chumra is based, US, is 2%. Now see, I have spot rates with me, today's rates. Peso per dollar currently 72. I need rates of 5 years. At which spot rate I am being provided with inflation rates. That's it. I can use the parity formula to find the future rates. Now, how does parity formula get for the future rates? Now, remember the parity formula, use the S0 spot rate into 1 plus HC inflation rate of one country over 1 plus HB inflation rate of other country. Which country will come in numerator inflation rate? The country whose currency is in numerator, peso. That inflation rate will come in numerator, and dollar is in denominator, so that inflation rate will come in denominator. So how will you find the rate for you? In spreadsheet, every formula starts with equal to, apply equal to. S0, what is S0? Spot rate, 72. Into means direct. Bracket open. 1 plus inflation rate in country one. Country one is the currency which is in numerator Megam. So 1 plus 8% means 1.08 over. Bracket open. 1 plus HB, inflation rate in country two. It's 2%. So 1 plus 2% is 1.0. Is everyone getting this? Spot rate 72 into 1 plus inflation rate in country one, whichever currency is in numerator, peso. So inflation rate of peso Megam 8% over 1 plus inflation rate of country two, US 2%. Okay, that's it. Press enter. You get the rate. So the value is a bit big. I don't need to take this to the whole 4 or 5 numbers, but just to show you, I'm just extending the cell size. Okay. Now, how will you get the rate for year 2? Okay, equal to. You need the rate for after 1 year. Listen this thing carefully, okay? You need the rate for year 2 now. So what is the current rate now? Current rate is the year 1 rate. You can either write year 1 rate or just write S0, the current rate, which is the cell, equal to D6. Take this value which is highlighted, D6. into 1 plus inflation rate in country 1. Country 1 is the currency which is in numerator, peso. 1.08, bracket closed, over, slash, bracket open, 1 plus the other country's currency, which is 2%, 0.2. Fit, enter, 80. Now, no need to repeat these calculations, okay? Just drag the cell. Just drag the cell. Automatic working, that's the advantage of Excel. I just click here on that lower corner and just drag the cells like this. I got all values. I don't need to calculate after calculating 1 or 2 times. See, I got the rates for all 5 years. Now, this is your first step in any NPV question, that if the life of the project is 5 years, you need rate for the next 5 years. If it's given, fair enough. Not given, spot is given, either you will be provided with inflation rates or interest rates. Just take that as spot into 1 plus HC over 1 plus HP. Which interest rate or inflation rate will come in numerator? The currency which is in numerator. And which will in denominator? The currency which is in denominator. That's always your first step, okay? Note this. Any questions I can take? Afzal, in paper-based exam, you have to show exactly like this. That take 72, multiply by 1 plus 8% over 1 plus 2%. Jack Ryan, you can always round off that. It's completely your choice. Maybe I will take all places decimals. You will take 2, others will take 3. No need to worry about it. Yes, yes, absolutely. That's what is the disadvantage of paper-based exam. Every time, absolutely. Yes, Ederato, it will always be there. Okay, so once you are done with the exchange rates, then you can move towards your NPV workings. Once you are done with exchange rates, then you can move towards your NPV. Now, how to do NPV workings? Obviously, it's a 5-year life, so make 5 columns. To present it, I can make it bold, underline as well to make it headings of the years. Okay. Now let's start the NPV because you were asked to find the value of the project values is NPV. I told you the first step should be currency rates. So I wrote the currency rate, spot rate was given, other rates were not given. So I just calculated it through purchasing power parity or interest rate parity. Now let's start with NPV. Okay. In NPV, since Jumra is in US and investing in Megam, all inflows outflows will be in Megam's currency. Okay. So let's start with all inflows outflows. The first inflow outflow is usually investment. Now there are 2 investments, one in land and buildings, and there is one investment in machine. Okay. You all know investment is at year 0. It's an outflow, and inflow, it's an outflow. So you need to show it negative. So investment in land and buildings was peso. $1,250. Okay. And investment in machinery was peso. 1,2. 150. That's it. Investment in land and building was 1250. Investment is always at year 0, we all know. And investment in machinery was 1250. Now, after investment, the project becomes ours. We start earning sales revenue from it. After the investment, the project becomes ours. So we start earning revenue from it, right? Now you have to show workings. We all know revenue is computed in a very easy form. We all know revenue is computed in a very easy form. It's just selling price multiplied by units sold. It's just selling price multiplied by units sold. So it is important that you mention each and every workings. So I'm stating revenue, working 1. Okay. I'm mentioning here as well that revenue is working 1. Okay. So what are the units sold? Go back to the question. $10,000, $15,000, $30,000, $26,000, $15,000. Now what I'm going to do is I'm going to take it in millions. I'm going to take it in millions, or if you want to be okay, let's just 10,000, 15, 30, 26, 50, 10, 15, 30, 26, 50. Okay, so units sold were 10, 15, 26, 30, and 15. 10, 15, 30, 26, 15. Wrong. Okay, this is units sold. And what is the selling price? It's given in peso. Now remember, revenue is always selling price into units. Okay. When you talk about selling price, you see, selling price is given in current form, peso 115,200. Current means today's 115,200. Okay. Today's price, year 0 price. Okay. And in the end, it states selling price will increase by 5% every year. So current selling price is 115,200. It's increasing by 5% every year. So do you think it's 115,200? It's current 0. It's equal to 115,200. And in year 1, it is going to increase by 5% every year. Okay. In year 2, it's again increasing by 5%. So take D8, last price, into 5%, 1.05. No need to work on again, just drag it. You get the prices. So units sold are also there. And selling prices are also there. So do you think you will be able to catch on revenue? Yes. How will revenue be computed? It's selling price multiplied by units sold. So selling price is in which cell? It's D8, right? Okay, selling price is in D8. Multiply by units sold. Units sold are in D7. That's it. Will it get revenue? Yes. But I have already recorded 1250 in millions. So I need to convert this in millions as well. So how you convert it into millions? 1290960 into 10,000, and to convert it into millions, you just divide it by 10,100,000 to get into millions. You get 1209.6 millions. Okay. Similarly, how to get year two? Selling price of year two. It's in E8. See, highlighted. Okay. Multiply by units sold. Units sold are in E7. You get the revenue, but to convert it into millions, just divide it by 10,100,000. 1905. Okay. And now you need to just drag it off. You get the revenues. Okay. So this is what you need to do with Excel. That once you have the investment in land and buildings, once you have the investment in plant and machinery, then obviously after that you get the revenues. How do you get the revenues? It's just selling price multiplied by units sold. Okay. Now one more thing, then you can copy. After revenue, we have to deduct costs. Okay. Now after revenue, we have to deduct cost. The first cost is production cost. For that, I will go to working 2. Production cost. Now, just look at the question. The production cost, see the current selling price is piso 115,200. The cost related to producing and selling each batch are currently piso 46,500. Currently, today, 0. The production costs of each batch are 46,500. So each batch costs 46,500 and the batches are given, just multiply cost per unit into units to get total cost. But it states that cost related to production and selling will increase annually by 10%. So it's currently piso 46,500 in year 0, but it will increase by 10%. So till year 1, it will increase by 10%, 1.1, 5,150. In year 2, again 10%, so D9 multiply by 10% and just drag it. Okay, you get the production cost as well. Now, how will production cost be recorded here? It's just the production cost per unit in 2 units. So equal to, show minus sign here. Okay, so that it's negative, the cost is negative, minus. Production cost per unit of year 1 is in D9, the highlighted value. Steric multiply by units. Units are in D7. Get it? To convert it into million, divided by 10,100,000. Negative 511.5. Okay. And here goes the story that I just dragged it. So I got the production cost, that it's per unit multiplied by units. I can take questions if you have up till now. That to start NPV, you first have to make currency rates. If all 5 years rates are given, it's fine. If not given, just use inflation or interest rate through spot rate to get the parity theories rates. Then find NPV. Investment is negative at year 0. Then revenue, selling price into units. Then cost per unit into units. There are some other costs as well, but just copy it and I can take any questions if you have. Caroline, there is no guarantee that question is going to be NPV. Afzal, it doesn't matter at all. Where do you write? You can write in the start or at the end. It's increasing by 10% each year, if Enva. Yes, you can add sheet 2. Syed Mobeen and Afzal, in paper-based, you have to write everything, every calculation on paper. It wastes time, and this is easy. But whoever is giving paper-based exam, that's he has to bear that brunt. Alvin, it doesn't mention that sale of each batch will increase by 10%. It is saying that production cost is increasing by 10%. So I already increased the production cost. No, Alvin, why are you using inflation rate of Megam? Inflation rate is the general inflation rate of the economy. That doesn't mean inflation rate of Megam is 8%. So everything is going to inflate by 8%. Selling price inflates by some other amount, variable cost by some other amount. So you are given that selling price will increase by 5% and production cost will increase by 10%. You have to apply specific rates there. You cannot apply the general rates there. Jack Ryan, I cannot understand your question. How can we add? Please show in the video. Afzal, there is absolutely no shortcut in paper-based exam. You cannot drag in paper-based exam. You have to waste your time in calculations. There is no other option. It will be discussed in any one session, Jack Ryan. No need to worry about that. Alvin, it will save your time if you do this. Okay, now you need to follow the rules that whenever you start the investment appraisal question, first deal with currency rates. That's already done. And after you are done with currency rates, then move towards NPV calculation, write the investments in year 0, which is outflow, negative, then write the revenue, selling price into units. You have to show the working. Then all costs should be deducted. The first cost is the production cost. It's per unit into units. Again, working is shown and negative. Now there is another cost. See, the current selling price for each batch is estimated to be peso 115,200. The cost related to production and selling each batch are estimated to be peso 146,500. In addition to these costs, a number of products will need a special packaging material which Chumra will send to Megam. Now, in addition to these costs, a number of products will need a special packaging material which Chumra will send to Megam from US. Chumra is in US. Currently, the cost of that here is $200 per batch. So it's $200 per batch, multiply by batches, you get the answer. And in the last line states the special packaging cost will increase by 5% per year. Now listen this point carefully. I need you to be very, very careful in this particular point. Okay. Now you wrote investment as negative, revenue was selling price multiplied by units sold. Okay. And production costs per unit into units. Okay. Then in addition to these costs, there is a special packaging material which Chumra will send. Chumra is in US to Megam, and the cost is $200 per batch. If it's $200 per batch, you need to multiply it with batches to get the answer. So I'm showing this in working 3. Now listen this carefully. This is special packaging. It's $200 per batch. It's $200 200 per batch, and increasing by 5%. Okay, so in year one, $200 multiply by 1.05, increase by 5%. Okay, drag it. Then the D10 multiply by 5%. Drag it now. Okay, this is special packaging. I need you to pay attention. It's $200 per batch currently, and it's increasing by 5% and increased by 5%. So it's per batch, multiply by batches, you get the special packaging cost. Multiply by batches, you get special packaging cost in final answer. So see, it's 210 in year one, equal to D10. Per batch multiplied by batches or units, it's in D7. See, highlighted by D10 into D7 equal to, you get the answer. And you drag your values. Okay. This is the special packaging cost. Now there's a problem. There's a problem. And you need to pay attention to this problem. I just want to do one thing, that to get it into millions, I need to divide it by 10, 100,000, and everything. So to get it in millions, it's 2.1 million. Okay, this is the special packaging cost per unit multiplied by units. Now listen to this thing carefully. That's an outflow. But you see, Chumra was based in US. Chumra was based in US and it was invested in Megam. So I told you that all inflows, outflows will be in Megam's currency peso. Invested in land and buildings was given in pesos. The plant and machinery was given in pesos. Revenue was in pesos in 2 units. The production cost was in pesos. This special packaging cost is given in dollars. 200, 5% inflation multiplied by units. So you get special packaging cost in dollars. You can't write special packaging cost in dollars here. You have to write special packaging cost in pesos, because it's a rule that once you invest in Megam, a foreign country, all inflows, outflows have to be in that currency. But here you have this special packaging cost in dollars. You need to convert it into pesos. Absolutely not a problem. To convert this special packaging cost from dollars to pesos, I need an exchange rate. I have exchange rates right at the first line. I just need to think whether I need to multiply or divide to convert it into pesos. I have to convert dollars to pesos because every inflow outflow has to be recorded in pesos. I have in dollars, I have to convert it into pesos. I have the exchange rates of all 5 years. That's why I did it in first step. Just need to decide multiply or divide. Now listen carefully. Where am I at the moment? I'm in Megam. I'm in Megam. I've invested in Megam. I'm in Megam at the moment. I'm doing project there. I'm in Megam. What is the currency of Megam? It's pesos. See the exchange rates here. It's coming in numerator. It's coming in numerator. It's a direct quote. Direct quote means you have to multiply. So just convert this 2.1, which is in D11, into pesos by multiplying with exchange rate. What is the exchange rate of year one? D6. Got it in pesos and just drag it. Let me repeat it. Now to just make some things different so that the mix-up is avoided. Workings are in red. Special packaging cost was $200. Multiply by the units, you get special packaging cost in dollars, but you can't write things in dollars there Because if you have invested in Megam, all inflows outflows has to be in Megam currency pesos. So everything was in pesos, that's why I didn't convert it. But the special packaging cost was in dollars. I need to convert it into pesos. I need an exchange rate. Multiply or divide, that's the only two choice. So whether you will multiply or divide. See, you are in Megam at the moment. You are doing a project in Megam. Megam's currency pesos in numerator, it's a direct quote. Indirect quote, you'll multiply. So you multiply to convert, you get the special packaging cost. So what is the special packaging cost of year one? Minus D12. Okay. Minus E12, year two, because I have shown negative. Minus F12. Minus G12. Minus H12. This is the special packaging cost in pesos. So the first two workings were very easy, but this was a bit tricky. That if you invest in Megam, all inflows outflows have to be in pesos. If anything is not in pesos, convert it either by multiplying or dividing. Pesos in numerator, direct quote, therefore multiply. I can take any questions here. Yes, Setokli, you are absolutely right. Nuridrina, yes, you have to increase it by the general inflation. Yes, Demali, you can do that. Amna Jamshed, because that was mentioned, that special packaging cost is increasing by 5%. Now, to convert the special packaging cost from dollars to pesos, I need an exchange rate. Here is the exchange rate in the first cell, first row, D6. So to convert this special packaging cost from dollars to pesos, I need to either multiply it with exchange rate or divide. Okay, so I need to get the quote. Since I'm in Megam, the peso is enumerated, it's a direct quote. I need to multiply. So I multiply this 2.1 with the exchange rate to get it in dollars. Sorry, in pesos. Yes, a million means 10, 100,000. So anything needs to be converted in millions, you need to divide by 10, 100,000. Alvin, it's your choice. There's no rule. By millions, because if I wrote the investment land and building and plant and machinery 1250 million pesos. So now I have to write everything in millions. Else you can convert that 1250 into thousands and route everything in thousands. It's your price. Afzal, you are absolutely wrong. The State Bank of Pakistan announced the inflation rate 8%. That doesn't mean that everything is going to increase by 8%. Some things increase by 2%, some things increase by 20%. Vegetable prices increase by other amount, fruit prices by other amount, flour prices by other amount, sugar prices by other amount. So you cannot say. If I'm opening the calculation from you for you, 511.5 billion is production cost multiplied by units, and you see I have divided by 10,000 to convert it into millions. FNWA 51150 is the production cost per unit, at least multiplied with 10,000 units. So you have to be alert in this that when you invested in Megam, all inflows, outflows have to be in Megam currency. Okay. If anything is in pesos, fine. If something is in dollars, you need to convert it into pesos by looking at the exchange rate. Either you need to multiply by the exchange rate or divide by the exchange rate. Since you're in Megam, peso is in numerator, direct quote, multiply. Now, is there any cost apart from this? It says training and development costs are estimated to be 80% of production and selling costs, excluding special packaging first year, 20% excluding special packaging in second year, and nil for remaining years. Now that's easy. There is another cost called training and development. Now training and development cost is 80% of the production cost in first year. Training and development cost is 80% of production cost in the first year. So just take 80% of the production cost. So minus 80%, 0.8 of the production cost. What is production cost? Sell. D17. Okay. 20% of the production cost in second year. So 20% means 20%, 0.2 of the production cost. So 0.2 steric. The production cost is in E17. Okay. And nil for the remaining years. So it's 0, 0, 0. Okay, this is training and development costs. Yes, Satya, same answer. And Afzal, you can do. Okay, so is there any cost apart from training and development costs? So there is no other cost. Now, once you are sure that you have written revenue and all costs, the production cost, the special packaging cost, the training and development costs, anything in other than peso converted by multiplying or dividing with exchange rates, then you have to write that tax allowable depreciation. You have to write the tax allowable depreciation. Okay, now remember, how much depreciation do you charge? Depreciation at tax allowable depreciation is only on machinery. Okay, whatever depreciation you charge to a project is cost less scrap value. Whatever depreciation you charge to a project, it's cost less scrap value. Okay, so the cost is 1250 million. Okay, and the scrap value is 500 million. Okay, so whatever depreciation you charge is cost less scrap value. You will charge 750 million. You will charge 750 million. Cost 1250 less scrap value. How will you charge it? It says depreciation is 10% on straight line. So straight line means every year same. So in year one, 10% straight line. So 10% is 0.1 of the machine cost. Machine cost is in cell C15, 125. In year two also, 10% straight line, C15. Year three also, 10% straight line, C15. It has to remain same every year. Year four, 10% machine cost, C15. But in the last year, it will be different. Now see, the cost was 1250, and up till now you have charged 125, 125, 125, 125. How much depreciation you have charged? 500. Okay. What is left? 1250 was the cost. You have already charged depreciation of 125, 125, 125, 125, 500. So how much you need to charge in the last year? 750. How much you need to charge in the last year? 750. But you won't charge 750 all amount because 500 will be recovered in the last year. So the only remaining amount you will charge is minus 250. This is the tax allowable depreciation. See, total all of these, which I'm highlighting. The net depreciation is always going to be cost less scrap value. So net depreciation is going to be cost 1250 less scrap value 500, 750. So add these all 125, 125, 125, 125, and 250. charge net 750. I'm repeating it. Tax allowable depreciation is basically 10% on cost. So 10% on cost, 1250, it's 125, then 125, then 125, then 125, every year same except the last year. Now cost was 1250 and accumulated depreciation in 4 years was for 500. So what is the left amount? It's 750, which will be charged, which is supposed to charge in the last year. But you won't charge all 750 in the last year. In the last year, we're getting 500 back as well. So the only leftover amount is 250. Okay. Once you deduct all costs from revenues, you get taxable profit. Once you deduct all costs from revenues, you get taxable profit. Now listen to this thing carefully. How will you get taxable profit? Don't just pick the calculator and start working. It's all Excel. Taxable profit, for taxable profit, you have to do revenues less all costs, the net of all sales. So equal to sum, just net of all sales. C14 till colon C20. Net of all these sales, you get taxable profit. Okay. Equal to sum. You have to add all sales. D14 revenue till D20. Okay. And now you need to bracket. You get taxable profit each year. Any problems with taxable profit? You just sum all the cells so that you get taxable profits. Yes, Anjali, if there wouldn't have been any scrap value, I would have charged all the leftover amount. That's all the 750. Mobeen, working capital is not considered for tax purpose because tax is paid on profits and working capital doesn't come in profit calculation. It's just revenue less all costs. Working capital is a balance sheet item. Babar Ali, I haven't finished my NPV yet. Just wait for that, please. Mohammed Afzal, this is balancing allowance, the last year which you do. Whatever is the cost, deduct the accumulated depreciation each year, 125, 125, 125, 125 each year. So 500 is deducted out of 1250. So whatever is left is the balancing allowance. Okay, so 1250 less the 500, the balancing figure is 750. You have to charge all that last year because that's the last option you have. But whatever is being recovered, adjust that. So 250 is less left, that should be charged to last year. Now, once you get taxable profit, on this taxable profit, you have to pay tax. Now in Megam, the tax rate was 25%. In Megam, the tax rate was 25%. So in year 0, you don't have any profit, so no tax, but in year 2, you have to pay tax. So profit is D21 equals to tax rate of 25%. Okay, got it, and then just drag it. Should have been shown as an outflow because tax is a payment. Now, once you do this tax thing, after tax, always add back TAD. After tax, always add back TAD. Remember, you did one thing wrong. Depreciation shouldn't have been deducted, but you deducted it to lower your profit and lower your tax. Now, once the tax issue has been settled, add back TAD. You need to add back the same figures which you deducted: 125, 125, 125, 125, and 250. Add them. Okay. Do this immediately after tax, because hadn't you deducted depreciation, your profits would have been overstated, tax would have been overstated, which is wrong, negative for the company. So once you deducted depreciation to reduce profit, reduce tax, add back TAD. Now, after you are done with TAD, you can deal with working capital. Now, how much working capital was invested? $200 million immediately, obviously in year 0, and in the 5th year it will be released back. So negative 200 working capital immediately, it's in millions. And then working capital recovery in the 5th year, positive 200. Okay. All this working capital adjustment should come after tax, because working capital doesn't form part of tax calculation. Tax is only paid on profits, revenue less all costs. Okay, so it's working capital after tax and recovered. Okay, and then finally scrap. Remember, scrap is an inflow. So scrap value of machine is 500 million pesos. That will be an inflow in the last year. And the scrap value of land and buildings after 5 years is supposed to be 80% of current value. So current value was 1250. It's 80% of current value. So 80% of 1250 is 1000. That will also be an inflow. Any questions with that? From taxable profit, you deducted tax, add back TAD, then every remaining stuff, working capital recovery, scrap, everything. Sayyid Mubin, if it's in reducing balance method, same, apply on net book value each year. Whatever is left should be coming to last year as balancing allowance, but add just scrap value in that. Mohammad Afzal, you can do that. We are not charging 1000 for land and buildings. FNWA, it states that the market value of land and buildings at the end of year 5 is 80% of today's value. So we are just following the instruction. Working capital is a balance sheet item, and balance sheet items don't come in computation of tax. Adreto, answer for you. Amna Jamshed, no, we don't assume. It's written in the question that market value of land and building is 80% of today's value. So 80% of today's value is 1250, that comes 1000. Yeah, Nuridrina, you can do that. Yes, if INVA, when you will end the project, you will dispose of everything. Okay. So the rules state that firstly you have to deal with currency rates of all 5 years. If it's given, then fine, else calculate it through parity theories. Then investment, land and building and machinery, then revenue, then deduct all costs to get taxable profit, then pay tax, then add back TAD, then working capital and scrap. Anything not in pesos needs to be done. Once you are sure that you are done with everything, all cash flows have been recorded, you just net them off to get net cash flows. You just net them off to get next net cash flows. Once you are sure that you have done everything, all cash flows are recorded, just net them off to get net cash flows. Now, how will net cash flows come here? It's from taxable profit, which is underlined till now. So it's equal to C21, sum C21 till C27. Okay, and it's equal to sum D21 from taxable profit, now further adjustments, colon D27. Okay, drag it on. You get net cash flows. Now, people might be wondering that once we have got net cash flows, just multiply the discount factor to get present value and PV. No. One last problem. This net cash flow, which we have come, it's in pesos. This net cash flow which you have arrived is in pesos because Chumra was based in US, it invested in Megam. So all inflows, outflows have to be in Megam currency, right? So everything, the revenue, cost, everything was supposed to be in pesos, whichever was not, we converted it. You get net cash flows in pesos now. Net cash flow means every inflow and outflow has been done. Net means everything has been done because it's net. Obviously, Chumra was in US, it invested in Megam. It earns some net cash flow. It won't just let that net cash flow remain there. It will bring it to its own country so that the net cash flows get converted into dollars. They are in US, they need dollars. They invested in Megam, all inflows, outflows have to be in pesos. But once the net amount remains, no inflow, outflow, net means no further inflow, they won't let that cash remain there. They will convert it to dollars, bring it to their home country. This is called remitted cash flows. Now, to convert these pesos into dollars, you need an exchange rate. And you already have them in D6, C6, everywhere. This net cash flows will be converted in dollars to pesos, either by multiplying or dividing the two options. Now, where are you now? Now you are in USA. Your remitting amount, right? The project has ended there. You have got net cash flow. Now you need to bring money to your country. Now you are in US. When the project was going on, you were in Megam. But now while remitting, you are in US. What is the currency of US? It's dollar. It's in denominator. It's indirect quote. So now you need to divide this peso 2700, which is in D28. Sorry, C28 by the exchange rate, which is in C6. Okay, 37.5. Exchange rate was in C6, right? 72. You get 37.5. Drag this on. All these pesos will be converted in dollars by either multiplying with exchange rate or dividing. Since now I'm remitting, I'm in US, the dollar is in denominator, it's indirect quote, peso per dollar, dollar is in denominator, indirect quote, divide. You got net cash flow in dollars. Now, this is a principle that once you invest in Megam, all inflows, outflows in pesos, everything was earned in pesos, but when net cash flows remain, this net cash flow won't be left there because no other inflow outflow is left. will bring it to your home country, remit to your own country. This net cash flows will be converted in dollars. When it will get converted into dollars, how to convert these flows to dollars? Two options, either multiply or divide with the exchange rate. How will you multiply or divide? Now I'm not in the project phase, I'm remitting. I'm in US, my currency is dollar and denominator in British code. Once you get net cash flows in dollars, that's the end of the question. You just need to multiply it with discount factor 12%, which is 0.893. The tables will be given 0.797, 0.712, 0.636. Net cash flows need to be multiplied by discount factor to get present values. Now just you need to drag it on. Net cash flows equal to C29 with the discount factor C30. Got it? Just drag it on. You get present values. Okay. And now you finally need NPV. You know all these present values would be netted off to get NPV. So equals to just sum of all the sets. You need to net off all the present values. So C31 colon H31, it's highlighted. All the present values would be netted off. Enter. I get the final NPV of 0.44 million negative, which means financially the project doesn't seem good. That finally ends this question. If you have any questions, you can ask from me. Ananya, the 250 arrived because 1250 was the machine cost. So 125, 125, 125, 125, so 4 times you charge 10%, so it's 500. So in the last year, the leftover amount is charged. So 1250 less 500, 750 had to be charged. But you 500 recovered through scrap, so the leftover amount was 250. Yes, Freya, you can do that. Syed Mubin, what we have to do if tax rates are different in both countries, you have paid tax of 25% in Megam. In Chumra, the tax rate of 20% and bilateral treaty exists. You have already paid 25%, so 20% is a reduced tax rate. No need to do anything about that. No need to illustrate words. Wasim Khan, then you have to pay tax again. Like if it's 30%, you have to pay 5% more. You better do the September 2020 webinar question as well. You will get that in this. Yes, Almir, you can take it. Yes, Alvin, you just need to search on YouTube how to add or delete cells. You can do that. Sana Mustafa, I am again sending my number. Around 150 students have been added on WhatsApp. Those who are unable to join through the link, I'm just sending my number again. Just drop me a private message. I will give you the link there. Now, this was the working on spreadsheet, which made it very fast. And I think seeing the time, we have brilliantly compensated the lost time. I apologize once again because of the technical issue. Hopefully it won't happen again. Now I am ending the class. Now, before I end the class, I just need a quick feedback message from all of you. How did you find today's class? Because that helps us to decide, and as you say, decide how to improve the experience further. Okay, so any feedbacks would be welcome, please. Everybody, please give the feedback on this questions tab. Thank you for all of them who have given the feedback, but those who haven't, please give the feedback. Before leaving, definitely before leaving. I'm not going to teach anything further, don't worry. There is no link for the feedback. You just have to type it here. And after giving the feedback, you can leave and we will meet tomorrow. But please do give the feedback because this helps us to improve the experience. Anjali, they may have a different way. They did it separately. I did it within the question. As long as our values are the same, it doesn't matter. Okay, so thank you very much for the feedbacks, and we will hopefully meet tomorrow.